time now to get on to the first session, ladies and gentlemen, of the day. We're talking about the ethics of prudence for the BFSI sector, the road ahead. We're joined by Dr. Amitabh Rajan, Chairman, Reserve Bank of India. Well, the former Home Secretary and an additional Chief Secretary of Maharashtra, Dr. Rajan is somebody who's also an independent director in the board of the State Trading Corporation of India and a member of the Stressed Assets Committee for the State Bank of India. Dr. Rajan, it's an honor to have you. Over to you.
Good morning, friends. It's an opportunity to be here. I'm privileged to find that it is a gathering of experts. So my task today is easier than it usually is, because I know that the uptake of this house is very high, and within the given time discipline, I can express myself more efficiently. Friends, this is a topic on which I have been speaking since 2015, when the first conference of FinTech in Bali was internationally convened. And ever since then, I have been covering several of the topics, several of the dimensions which we are going to discuss about the sector, which is the present concern of ours. However, I would confine myself to a theme, and that will be ethics of prudence. I'll explain what I mean by that. And the topic, therefore, is ethics of prudence for the BFSI sector and the task which lies ahead at this point of time. Let me first give a general perspective, which is very important to highlight today. The BFSI sector conceptually is a sector essentially of three components: banking, financial services, and insurance. And conceptually too, it has a range of issues which have, since time memorial, confronted entrepreneurs, policymakers, thinkers, researchers, and citizens at large. The sector has been clubbed together. These three components have been clubbed together in economics, particularly in institutional economics, because the sector ultimately is interlinked. And therefore, when either a response or an initiative is to be discussed, it has to be discussed as an integrated whole, remembering also the human experience with technology and finance all over the world. Friends, 21st century, as far as finance and technology is concerned, really started in the year 2008. I call it, in my articles which I wrote, I called it an epistemic year, which means that in 2008, a lot of learning had to be relearned. And since then, there's a phase of history which has unfolded. And my talk today basically is on that. Now, to recapitulate quickly and then go on to the task ahead, let us first see what are the landmark years. 2008 trends. 2008 trends is the year in which global financial crisis surfaced. It not only surfaced, it is spread and it turned deeper, and it has several consequences which we all know. But what we must emphasize, at least I must emphasize for today's talk, is that the importance of regulation was understood. And in the field of economics also, we have started realizing since 2008 that one scholar, however great he or she is, not sufficient to explain the phenomenon of human experience in technology and finance. But it has to be an approach which takes from all the pioneers who have written in economics. To put it briefly, Adam Smith, his importance is still not over. When we deal with Smith, it is not an inquiry into the wealth of nation, but it is also his book on moral sentiments in the market. That is all equally important. Then we come to Keynes. His theories not only were a part of the solution of early years, but also they kept on changing. So we have neo-Keynesian and so on and so forth and various schools of thought. So we not only capitalize today on the insights of Adam Smith, Keynes, Marx to some extent, and ultimately Schumpeter when we try to understand the business cycles. The sum and substance of my point at this stage is that today, in 2021, our approach towards viewing finance will be a mixed recipe, something of the type which Joseph Stiglitz does. The most popular thinker, Joseph Stiglitz today, Nobel laureate, is basically on taking views from all sides and ultimately coming out with evidence-based solutions. Thomas Piketty, Atkinson, and others are also pointers in this direction. So 2008 was an epistemic year in economic theory. 2008 also, friends, was a year in which technology disrupted through a revolution. The blockchain white paper also came up in 2008. And the whole notion today of the fourth industrial revolution has also come up. So initial thinking in 2015, Bali conference, international conference, which I highlighted, was on these aspects. Later, the World Economic Forum also thought about it. And in 2016, with regard to the contours of the fourth industrial revolution, technological disruptions and entrepreneurial policies and shaping up, a train of thought started. Governments also were not sitting idle, and G20 had its initiative since around the same 2015-2016 years, and we had, in the banking sector particularly, various initiatives at the international banking finance level. It had its impact on, of course, insurance and also financial technology, financial services. Now, let us take up the problems staring at us today. We can think of a new phase in which post-COVID situation, there are huge opportunities across the country. I'm talking about India now. But there are three things which have to be highlighted. for India. And that is the second part of my discourse. I have been in companies, I have been in policymaker. I also am a part of the stress assets and keep track of the developments in the entire sector. I feel two things about the approach. My one feeling is that ethics is important because we may have talent, we may have enterprise, we may have approaches to the right institution building, but the ethical content of the entire exercise is needed. When I see the cases of stress assets and work in groups about its solutions, it does strike me that in India, at least, the element of profiteering, greed, and aggressive vendor-driven marketing has limitations. And persons behind the institutions who work on it still have to be prudent. Now, what is prudence is known to you, but what the philosophical meaning of prudence means three things. One, you align with your morality inside, that is prudence, that is ethical prudence. There is a fiscal dimension to it, governance dimension to it, in which prudence means a conceptualization of risk, all types of risk. And third, prudence also means a stand in morality, which is not only personally practiced, but also enforced and propagated in the society. So the prudence today is the most important thing. Prudence is also important for policy making, because ultimately no solution of the fourth industrial revolution in any dimension, any area is going to come unless we respect the technical brain which comes out with solution. The Harvard Business Review articles these days are full with team building efforts. They tell us that we must respect the technical person who comes out, usually a younger person, who comes out with solutions of things which are immediately required to be solved. So decision-making boards should respect the youngster who comes out with newer solutions. But it has also to check up the decision-making in the boards and governance also have to see that the voice of the new paradigm, voices of the new paradigm are not lost. In practice, I believe that these things are not happening. Still, a phenomenon which is called in finance, called financialization, in which the financial director or advisor or controller is more important than the tech guy. That is not going to be a solution. Therefore, it has to be merit-driven, extremely courteous type of scenario in which we all will be functioning. Third point, apart from prudence and ethics and awareness, cross-disciplinary abilities are equally important. When you sit in the board, when you sit in the stress asset committee, or when you sit in a regulatory framework at the top, you still have to think on your own, and you must develop the in-house capability. When we talk of the regulation sector in insurance particularly, we find that India is these days is doing very well. The regulator of insurance in India is doing very well. Why do I say that? It's doing well because it is receptive to the ideas, problems, perspectives in a very open, discursive method and is working with a sense of urgency. You know, in finance and the fourth industrial revolution-led driven finance, it's very important to have a sense of urgency. If it is not there, we'll be lagging behind. Let's take an example from the banking sector. Now, in the banking, the problem of blockchain technology remains. In India, particularly, the whole question of cryptocurrencies is a live issue. There is a Supreme Court judgment, a very learned judgment. But here also, ultimately, it has to be resolved in-house within the country and fast enough. Otherwise, other countries will move ahead and we will be lagging behind. And the pace of development of the fourth industrial revolution is so fast and the fusions are so rapid that time, if it is not utilized, is lost. So a sense of history, a sense of urgency is required in that direction. Coming close to the blockchain area, I will also like to highlight one effort which is done in the United States. Day before yesterday, I came across an IPO proposal from a Silicon Valley country enterprise, which is open before going to the market. It is a 2,000-page, cogently written document on investments on mobile. And would not like to name the company because it's not important. What is important is that the best brain in the field of technology and finance have to assess risk truthfully, honestly, and prepare a document before the SEC regulator in US, and it is open to public. And they, while analyzing the risks, they have been very truthful. I think system is like this, that one has to be truthful. And it is learned in the sense that it is integrated knowledge. We can learn a lot, friends, whether in banking or insurance, in policy making. If you see what US is doing with regard to the latest and the best technology from Stanford coming into the market to mobilize resources, and then see their documents faster than we can. Similarly, in the field of regulating blockchain, which is extremely difficult and tough task, not just cryptocurrency. Cryptocurrency is not equal to blockchain technology, but blockchain technology is wider purview. There, the efforts of the legal scholars of the United Kingdom and European Union is an effort to see. I'll end by saying and giving you the example of how G20 has sought to balance or to find an equilibrium between the FATF concerns on the bad thing of the enterprise with the emerging needs to harness blockchain technology faster in terms of contact management, fraud detection, cybersecurity, and so on together. The reports which has recently been written or the stand which FATF has taken recently this year, mid this year, it has churned out a number of documents. The whole world is thinking about these, and we also have to think. As regards the robotic software, marketing is an issue. It has started happening in the banking sector. And it is very important to see that we are not unaware of the limitations of a frontier technology. When vendors talk to us, talk to the purchasers, they give a rosy picture, but most of the products can become outdated, may not deliver the way they are propagated, and ultimately there can be a problem on the company, whichever side it is. Therefore, in-house capacity building is much important, also for insurance, for financial services sector, enterprises, and also for other areas like insurance, because the new is attractive, but new has to be prudentially feasible. And for that, in-house capacity building, inherent constant thinking through teams also becomes important. Short point, therefore, is that ethics is important, ethics of prudence is important, and institution building for a better future will have to be much more of a team building, much more of an introspection, much more of economic theory thinking than it used to happen in the past. Thank you.
Thank you so much.